Hey everyone, John Henry here, slingshotfutures.com, and welcome to the daily futures and crypto market outlook for tomorrow's trading. That is going to be the 15th of the month. Overall, we did have a decent amount of movement today, especially on markets like crude oil, but it still seems like we're not really getting the job done. There's a lot of volatility, but there's not really much accomplished. Even on crude oil, they gave back the better part of the move up towards the later half of the day. So we're not really sticking the landing, if you will. We're trying to take off, but we're not hitting that landing. So that leaves us with a market that is mostly range bound, but with some pretty wide ranges, and that goes across the board. Now, cryptocurrencies are a little bit of a different story. We'll get into those a little bit later. But as always, before we jump on in, make sure to swing on over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. That's going to let you sign your email up on our email list so you'll be notified every time one of these videos comes out. Along with that, in the email itself, we talk about all kinds of different stuff, stocks, cryptos, and futures, obviously, like the market, or like the video, and then we go into pretty much everything. As long as it moves, it'll probably show up in there at some point. Along with that, we also talk about different announcements and all kinds of cool stuff going on, so it's a great newsletter to get your hands on if you haven't signed up already. Looking over to the left, just a couple options: live trade room and subscription trial info. If you haven't done so already, make sure to click on this. You can sign up for a 3-day trial in our live trade room. You'll be able to log in, sit down with us for a couple days, see our screens, see the trades that we're looking to take, and just kind of go through a couple days with us and how everything works and operates. You can ask questions, you can hang out with us for a few days. Again, it's just a really good experience if you haven't done it already, so make sure to sign up for that. If you join as a full-fledged VIP member, you of course get the live trade room as part of the package, but you can also sign up for a weekly or monthly subscription to the live trade room. If you do plan on joining as a member, don't forget to check out some of the discounts that are going on inside the store page. Now, taking a look at the euro for the most part, again, a lot of movement, not a whole lot accomplished. We are going to be closing fairly high on the day, in that we opened and we're going to be closing. So we have a lot of bearish attempt and a lot of bearish failure on the downside, and a bull body on the candle. So the daily candle looks okay, but if we look intra-candle, what we see here is a little bit of a mess. Tells a different story. So the overall momentum that we had was affected largely by news. News threw the market around quite a bit today, along with a few things from President Trump putting some things on Twitter, and just it was all over the place today. So with that back and forth, we are going to be closing out the euro on a bull note nearing the highs, but we're still kind of fading back a little bit. The one thing that really stands out here is the potential of this being either a flag or a wedge. It all depends on how you want to draw it up, but either way, it looks like we are running into a little bit of consolidation after two beautiful legs to the upside. So this little pullback here, the anticipation is that we maybe make one more attempt at the highs, but we're not really getting a... Again, they're not sticking the landing. They're showing up to the party, but they're not really pushing it. And that kind of backs us out to looking at the bigger time frames, thinking, well, we've got a pretty strong bear trend in play. If they do make a leg to the upside, maybe they're just gunning for the highs of that wedge. A couple other levels of concern: if we look backward, this was a big stopping point on the 12th, and we're only a little bit a ways away from retesting that low. So there are a lot of big levels floating around here at that 19,200 to 300 area that could act as levels of resistance. So even though in the short term it looks like we may be gearing up for a flag and a breakout to the upside, I have to be looking on the downside given the larger bias. It just makes more sense to be looking to sell up here than it does to buy. We are cycling off of major resistance at 19,175 to 180, but right now we're just kind of in a range. We are at the highs of the range, so I would rather be looking to sell. Anywhere from really a retest of 19,180 on up. Anywhere above 19,180 is fair game, but again, that previous swing low looks pretty juicy. If they do want to pop up to 19,300, that might not be a bad area to look for some bouncing back down as well. I'm not necessarily anticipating that we blow through a new low and smash down again. I think a lot of that has already been exhausted. Really, the main idea for the downside trade in the first place is to retest the lows of where they put in a floor. They put in a floor right around 18,750s, and they're not letting the market get through it. Every time it's tried, it either succeeded very shortly after and then quickly failed right back up again, or they bounced right off of it. So I'm looking for selling opportunities up here to drive the market back down to that floor for a retest. Outside of the euro, looking at gold, a very similar situation here as well. News obviously throwing the market around, but again, a bigger bear trend at play. We still have the open weekend gap. That is still something that could be in play. It's very infrequent that it doesn't fill it during the week that gap is formed, but in this case, we've only got one more day left in the week. They're running out of time. So if they are going to rally up, they're going to have to be one heck of a rally tomorrow to try to fill that weekend gap. Otherwise, we're looking for it next week instead. But for right now, we have a grindy bear channel working its way lower. The market has been grinding lower, and the lows and the highs look pretty good for a possible channel. The one thing that is standing out here more so than on the euro, they've overdone themselves down here a little bit more aggressively. The euro does have signs of exhaustion at the lows, which is why we're not looking for a big downside objective. Gold does as well, but it's a little bit overdone in that channel. If we draw the channel up, they really just kind of blew off the lows and they never really came back. So again, looking at the bigger picture, we're looking for selling opportunities to continue the overall bear trend. Don't lose sight of the fact that you have the weekend gap there, so if they do show some really strong bull signs, you may have some buying pressure. But we have an ascending wedge that we're stuck in right now. And until this ascending wedge is out of the way, whether it does it right now and falls lower, or if it tries and then pushes up and hits that major level of resistance at 1336, doesn't really matter. I'm waiting for this wedge to kind of get out of the way and then looking to sell for a cycle back down. Just like on the euro, I'm not looking for a big push to a new low. We do have a couple intermediary levels of support in the way. Obviously, 1323 is the big one, but we may even run into a little bit of a brick wall at 1330.5. It seems to have put on a ceiling, and it would make sense to see them act as a floor if we do find some selling off of 36 down to 30.5. So plenty of room for a potential move. We just have to play it a little bit more carefully on gold than we would be on the euro. Looking at crude oil continued that rally to the upside above the $50 mark all the way up to 50.50 and then pulled all the way back down and gave most of it back. Overall, still a very strong bull trend in play and certainly no joke to the upside, but this looks like they pushed a little too hard. If we go across the highs, we can see, I mean, that is a heck of a spike on the top, and that's not really what you want to see. That shows signs of potential exhaustion where the market spent all of its fuel. It unloaded the clip, unloaded the magazine at the highs, and it just doesn't have anything left to give, so it has to start pulling back. The obvious area that really stands out for a possible pullback is the little floor that they put in around 49.20. We found a low, they double bottomed, they triple bottomed, and then they quickly broke the low, ended up being a trap, and that started this rocket ship to the upside. So I would love to see a retest of that low. I think it makes a lot of sense to find some buying pressure between 49.20 down to 49 for that bounce back up, and that allows the market to kind of correct back a little bit and get this overzealousness from the buyers out of the way. They have a massive blow off on the top, likely going to overcorrect on the bottom as well. It may go even further than that 49.20, but down to even 48, looking at 48 40s to 50s, that doesn't look that bad either. We have a lot of support and resistance coming through there, and that would kind of be the next step at around 48.40. So there is a potential short-term bouncing location at around 49.20, but if they do want to dive lower, don't be surprised to see it drop down to around 48.40 before you start seeing that buying pressure step back up to the plate. Still very bullish in the bigger picture, but right now I'm looking at this thinking we are a little overextended. I would much rather see a correction further down before we go all crazy on the buy side. And then finally the S&P, I mean, it's another day where the S&P just seems like a waste of time. The index markets really didn't accomplish a whole lot at all today. Barely any movement. If we zoom out and we look at the last couple days, we're still stuck in the same range. We haven't left. So the fact that we're stuck in this exact same range, we're testing the highs of it after having already failed off of the lows, which they tried to break down yesterday, didn't work. Tried to break it, didn't work. Tried to break it again, didn't work. Buyers are buying these lows up like crazy. But then when we get to the highs, they all start exiting like crazy. So we're not getting that follow through. This does look like we need to be looking to buy low, sell high, stay out of the middle, just like any other range. But the fact that the buyers are so aggressive on that most recent low, especially with that potential trap on the bottom of the previous low a day, and an immediate rocket ship to the upside, this looks like a quick little pennant before continuing the breakout to the upside. So I am still long, and even though this market doesn't look like much, I wouldn't mind seeing a secondary leg to this rally on the upside. If we're looking for a secondary rally, measuring from the low to the high spike, and then looking right now at the current low, that may change, but the current low puts a projected target up at 25.01. So that puts us right in that 2,500 level. That's a big level of resistance in the first place. And it all kind of lines up. We have a trap on the lows of a potential range. We have a pennant at the highs after attempting the probe on the top, which so far the sellers haven't taken back. It looks pretty good for a secondary leg to the upside. So looking for buying pressure, preferably off 24.91.5 to push the market up to that 2,500 level, if not up to 25.01. So everything looking pretty straightforward across the board here. Now, in terms of news for tomorrow, we do have some things tomorrow morning out of the U.S. At 8:30, we have the core retail sales month-over-month for August, forecasted at 0.5%. At 8:30 as well, we have the retail sales month-over-month for August, forecasted at 0.1%. But that's all we have to work with tomorrow. There's not a lot of news going on tomorrow. There hasn't been really a lot of news this week, and we've really felt that slowdown. The last couple days have been nice in terms of volatility, but they have to start getting good continuation. Volatility sometimes isn't enough. They need to stick that landing. So, you know, we just got to play it a little bit safe on the future side of things. Now, for you crypto traders, I hope you've got your blue light special sales hats on, because we have a dip on Bitcoin, on Ethereum, on Litecoin. You name the coin, we have a dip on it, and we're finally pushing into sale territory. This is what we've been waiting for, what we've been talking about for the last month. We've been waiting for this pullback to around 3,500 to 3,000 to buy this beautiful sale that the market is giving us. Now, it is looking a little bit exhausted to the downside. We have a pretty parabolic move in the sense that it is starting to kind of cycle down. You can see it picking up speed. That is a sign of potential exhaustion. You can also see that on the highs. It's almost like a bendy straw pointing down. Now, that normally you would step back and say, wow, that doesn't look that good, right? Why would I want to buy this? But this is where starting to zoom out and looking at bigger time frames can make a big difference. If we look at a daily chart, this area, we're sitting directly on top of the moving average test, which we haven't hit since July. The last time we hit it in July, it was an absolute rocket ship. The last time we tested it in July, we were sitting at 2250. That pushed all the way up to almost 5,000. So now the fact that we are back again gives us another reason to be looking for a longer term buy around 3420, up to potentially above 5,000. If this wants to continue that kind of movement, we are looking at a pretty good spike up, massive follow through, and then looking for a little more continuation up to 5,000 again would make a lot of sense. One thing that stands out in the bigger picture, maybe for a deeper pullback, is right around that 3,000 level. Now, obviously, 3,000 by itself is a big number, right? 3,000, 2,000, 5,000, 4,000, all of those big numbers are going to have an impact on the market. The market tends to respond to those types of levels because they're easy for people to see. But if we look at the 3,000 level, there's a little bit more to this one. We have a double top previous, and then they broke out. We have yet to retest that breakout point. Very infrequently are you going to get a level, whether it's a double bottom, a wedge, a channel, doesn't matter. Very infrequently are you going to get a situation where it breaks out and doesn't come back to give it a retest and a potential bounce off of there. And that's what I'm looking at right now. We have a double top. They broke out aggressively all the way up to nearly 5,000, and now they're starting to pull back. A retest of around 3,000. We're at 3,500. That's the sale price that we've been waiting for a long time. But if they want to dip lower to 3,000, I would be a happy camper with that as well. Overall, we do look a little bit extended to the upside, and a correction does make a lot of sense. A wedge bottom, if they want to take a little bit longer, it's going to take a couple extra hours for this to form, but if they can form something like that and get a bounce, then we would have our moving averages in the same place. We'd have the double tops retesting as support. We'd have the big 3,000 level. We'd have a lot of stuff combining for a major kill zone if they take a little bit longer to dip down. Overall, though, we are in sale territory on Bitcoin, and I am looking to buy for continuation of the upside. And there are plenty of opportunities zooming into faster time frames as well to do just that. But right now, we're still in bear mode. They're still a little bit overzealous. So unless you're limiting in and buying on these dips, we're waiting for a little bit of a turn before you go diving into Bitcoin. But we are in the area of major interest. Bitcoin Cash. however, still doesn't want to give it to me. They're still waiting for that 0.1 or even 0.11 at this area. We just are not getting that dip lower. Seems relatively unfazed by Bitcoin's drop off the highs. Bitcoin Cash is nowhere even close to the way that Bitcoin looks. That may mean that there's a lot of pent-up energy and it follows through, or it may show some kind of behind-the-scenes strength of Bitcoin Cash setting in. Either way, though, I'm still waiting for that dip lower on Bitcoin Cash, and it just does not want to give it to me. So I will remain patient, and we'll wait for it to come to us instead of us chasing it down. On Ethereum, we are, well, we came close. The prices that we were talking about around 65, the lowest point that we dipped today was right here, and that was at 67.4. We didn't quite hit it, right? We're still looking for a little bit further movement to the downside. We are bouncing off of quote-unquote sale prices here as well, but not as cheap as I want them. I'm looking at around 65 or lower before I go diving in, but still, we are very low in the price. Every time we've come down here, the market has found a huge amount of rejection, and if we look since the 13th of last month, we have an arguable slight rising wedge, and we are testing that today as well. I can't let go of the line because it'll just flatten out on me. That's how shallow it is. But there is a reason behind seeing that little bounce right there. It stands out pretty clearly. We have a wedge bottom that's rising higher from the low on the 13th or 14th all the way to the 4th, and now we're retesting it again on the 14th. It seems to be a little bit of a common number setting in. Did anyone pick up on that? We're going from the 14th to the 4th to the 14th. So we may have another rally up until the 4th next month. Either way, though, we have a potential buying area a little bit lower down if the market wants to dip down. Otherwise, we do have that wedge bottom buy that is setting up on Ethereum right now. On Litecoin, dipping down to that sale pricing as well, sub 15s, that's what we've been talking about as well for another month. And this whole area is a potential beautiful area of interest. The one thing that stands out really nicely here is the potential channel high. We were looking at this as a wedge, and it did break down, but now this has a chance to turn into a channel, and that may mean that we might have some prices a little bit further down at around 13 next up, so we can start jumping in there. Either way, though, very exhausted on the move lower. This move down was really all done on one giant candle with a little bit of follow through the next hour. And very frequently when you have that kind of movement, it's seen as unsustainable. The market's going to have a hard time sticking around when everybody got out at the same place. All that's left are the buyers. So looking at this as a potential longer-term investment area as well for buying and holding for quite a while. I don't mind hanging on to this to the next month if I have to, but we are sitting in sale territory on Litecoin as well. Now for the extra, we have LMC. Now, Lomo Coin has had a beautiful rally to the upside that started yesterday. We finally got a little bit of a pullback today, pulling into the moving averages, and now we're seeing a little bit more continuation to the upside. Really nice bullish follow through on the buyers. They never got that trap on the low. They actually missed that dip by just a couple ticks before turning right back up again, and now we are looking very strong to the upside once again for another, it almost feels inevitable, test of the highs. Now, looking back at earlier levels of support or resistance, it's hard to ignore that this zone across here is a big area. Around 1800, we've had a lot of resistance set in. They tried breaking above it, quickly failed, came back again. So we need to pay attention to this 1800 level. I want to see it break above it with something like this, that monster spike higher, or we may just get stuck at that 1800 and fade right back down again. So we got to play this one a little bit more cautiously, but it is looking good for one more lift to the upside to finish off a secondary leg to new highs. So that's going to do it for the outlook. Like we always say, even though, you know, on the crypto side of things, we're in beautiful long-term buying areas, the futures aren't looking as good, a little bit more volatile, a little bit choppier. Any market that you come and approach and look to trade, you always have to make a plan for it, and that's why we always say make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.